What is up, responsible day traders? Jason G here, head coach at Responsible Day Trading. So welcome to another Monday morning rundown where I'm going to be taking a look at the E-mini S&P futures. Today's Monday the 18th of July. Let's start as we always do by taking a look at the news we are expecting. We're going to go to responsibledaytrading.com. I've got it open here, so you go to news and then market news, and we can see what we expect for today and for the rest of the week. Today's Monday, so we don't have any high volatility news coming out today. That's good. But the rest of the week, there are some events to be aware of and just to be a little bit cautious of when trading around those times. So we do have building permits tomorrow, on Tuesday, on Wednesday. Crude oil is going to be quite a big one for the markets. And then on Thursday, some quite significant news events here with the jobless claims and the PMIs. So just be careful around those times as always. I want to take a quick look at the VIX index. Now this is a ticker symbol that is very popular for helping set expectations of the volatility of the S&P 500. So I look at it every so often, once a week, something like that, just to get an idea of what kind of volatility I can expect in the markets in general. And as you can see where we are now, we're at 24.8, around about in the middle here of the range, of the recent range from 2020. I would say that normal volatility for the VIX index is anywhere between 15 and 20. So these are the sort of normal volatility areas here. 15 to 20 is perfect for day trading futures and taking scalp trades and so forth with low risk when you're below 20. And when you start to get above 20, price action can really have some strength behind it, and we can get those big bars and big moves. Can be a little bit difficult to manage with low risk. So it's good to know where you are in terms of expectation of volatility. Right now it's come down somewhat, which is good. You can see where we've had these huge peaks. It tends to be very difficult to trade such high volatility around anything more than 25. Really, I find it quite difficult to trade with low risk. Of course, there are other types of traders that have higher risk reward ratios than I do. Typically I'm looking for 2 to 1, 3 to 1. I like to get an understanding of what to expect, and yeah, we've moved down a little bit, so the volatility is a little high, but it's reasonable. It's come down somewhat from some of the high volatility months that we've had recently, down at 24. Okay, so let's have a look at our charts. Okay, as always, we're going to start with the daily to get a high level perspective of price action. So what's been happening? So each one of these bars represents one day in the market on the daily chart here. Now if you have a look over here to the left side, back in December, February of 2021, 2022, we put in this significant resistance, turned into support area here. We've revisited that support area, created an initial bounce, then we had the higher low, but still a bounce in the general area, found some resistance off of this area above us, and then we put in most recently another respect of that area. So this would be a multi-bottom support area. And if you have a look at what the MACDs were doing at the same time, I'll just mark out those pivots, the most recent pivot for you to get a reference of where we are on the MACDs. That's this most recent pivot over here. Just take a look at that. You can see the retracement divergence, so a really small pullback on the BBs there. And then if you look at what happened on the MACDs, it was a big pullback. So that's classic retracement divergence, indicating that the move to the downside is not strong. When you look at that in price action, it looks like we're just going to continue on down, but the MACDs are saying something different, and that is what's caused the recent, in the last couple days, last week, continuation to the upside. We had a reversal pivot there and another strong bar there last week on Friday before pushing up further this morning and in the pre-market. And you can also see the MACDs And you can also see the BBs have broken out of the Bollinger Bands, and we're showing strength to the upside here. We do have a little bit of distance to move to the EMAs. Now when I say a little bit of distance, this is a daily chart, right? So currently we're around about 38.93, well that is 39.61, so that's 80 points away. That's some distance for a day trader for sure. So right now it looks like there is the potential for continuing to the upside, to maybe revisit this EMA as we did over here previously, and as it acted as really strong resistance. And then maybe for the future in the coming days and weeks, we might actually break inside here, maybe pull back, push on further a bit higher up, possibly. We'll see what happens. It could just be really strong resistance and hold, and then allow price action to continue on down, which would be in line with the general direction of the market, the overall sentiment, which is to the downside. So we'll keep an eye on that. We do have distance to run to the zero line as well. So right now for me, everything's looking at this point like we have the potential to push on up. There is a resistance area here as well. We had multiple pivots off of this area here, so this may hold. I mean, it may not push through to the EMA. If it does hold and shows signs of weakness to the upside, then we might just hold here and start to pull down again and make another move to the downside. So let's take a look at the 10.946, the next chart I want to focus on. Okay, I'm just going to scale this in a little bit. Now the markets are going to open in about an hour, so we're seeing some pre-market price action. I want to do a little bit of chart work here with you, so let's mark out this area here. Okay, so clearly an area of dynamic resistance, and if we go along here, see what I've drawn out here is a wedge. Now there are areas where I would call these overruns or breakouts of the wedge. So let's just take a quicker look at why that I think that is an accurate wedge and why it's significant. So you do have your main pivots to this wedge, okay, here and here, defining the wedge, and then things get a little bit more complicated as we get into the compression of that area in the wedge. So let's just zoom in over there. And so the reason I'm able to be confident that this is a dynamic support line for the wedge is the respect that we see of that dynamic support line through the pivots of support and resistance. Okay, you can see we made a big breakout of that wedge, no respect whatsoever, pulled back, and it acted as resistance. We then made continuation to the downside, and take note what happened on the MACDs here. We do have a big retracement divergence of the distance that price action moved versus the distance the MACDs moved, indicating that there's no real strength in this move to the downside. It turned around and broke straight through that area, showing no resistance at all, then pulled back and used it as support in this area here. We then pushed to the upside, used it as support again, put in a head and shoulders. You can see those three pivots over here. There's your left shoulder, your head, and your right shoulder. Couldn't really hold that area, and then made another breakout of the wedge. Again, pulled back and put in some resistance, and then this time we had enough sellers in the market, confirmation, I think you would say, that this is going to go to the downside. We made a big move to the downside, found some support at a previous area of support in a previous period of time, and then we start to make our way back up towards that area again, this dynamic resistance line. Again, we broke through it with great strength as we did on the previous occasion, and then again we pulled back and found some support as we've done on previous occasions. Okay. And then things start to change. It's really confirmation that this wedge is back in play again, and price moves towards the other extremity of that wedge. moves right to the outside, and then pre-market, just pull this down a little bit so you can see it clearly. Pre-market, we broke outside. You see this tiny pivot here? That was an attempt at support on the outside of the wedge, and we've got failure now, right? So we're back inside the wedge. And if we look at what the MACDs are doing, we had this strong white color change on this move to the upside, which really indicates a change in sentiment, that there's not much strength in this left. Whenever we get this strong white color change, we have to be really careful if we're expecting it to continue to the upside. There are other factors we take into consideration, obviously, when trying to build up the narrative, but this is one of the strong signals that this is not going to hold. Most likely, if we get some more confirmation, more convergence of information, then it helps us set our expectations. So what could happen next here is we're possibly going to pull up to this area here, which is 39.01. Currently we are at 38.93, so about 9 points away, and we really want to pay attention to when we get to 39.01 to see how it behaves. Is it gonna hold as it has done in previous examples over here on the lower part of the wedge, or is it going to fail and just continue to the upside? So it's a key area for me to be paying attention. Are we just going to do something like this, bounce around and then move to the downside, or are we going to slam straight through it again, get some support on the outside of that wedge? That to me would be an indication of potential continuation to the upside. But if we do hold on the inside, then we're looking for potential continuation back to the downside. Who knows how far? Okay, so that is my technical analysis for the current price action. Let me just clear away some of these, and we can move now to the next chart we want to take a look at. Just bring this all back into scale. Okay, we're going to look at the 1597 now. You can see, so this is the area here that we're looking at. This area here is what's just happened over here. Okay, so we were talking about how the BBs change color here, really strong white, and you can see the same thing over here on the 1597, strong color change, and I think even on the 4181, strong color change, starting to show a strong color change on even the 28657. So everything was in agreement with each other in terms of the MACDs. What's happened here now is we got so far away from the EMA, and this would be the mid-band of this chart, the fast EMA. This is the slow EMA, which represents the next chart above, the mid-band of the next chart above the 4181. So we got so far ahead of it that price often wants to snap back, and that creates opportunity. So for us, that's a snapback trade opportunity where price will always want to pull back to the EMAs. And in the last half an hour or so, that's what we done. We pulled back and we didn't even respect it. We broke straight through. Again, if you look for MACD divergence or retracement divergence, if I just mark out this pivot here and how it lines up with the MACDs, you can see how effectively we work with the MACDs, and you can see that huge retracement divergence. This pullback here is maybe 10% of the whole move to the downside, a little 10% pullback. But if you look at the price action, that's more like an 80% pullback. That's classic retracement divergence, which indicates that the move to the upside doesn't have any legs behind it. It's not convincing that it's going to continue to the upside. The MACDs are telling a different story, and to me, they never lie. So I would be looking for a short opportunity back to the EMAs if I was trading this. I don't really trade pre-market, so that wasn't an opportunity available for me. I'm just going to clear this away, and then you get the strong color change on the BBs, indicating more strength to the downside. So we break for the EMAs, we break for the zero line. As I say, we're approaching market open in the next hour. I really expect price to, based on what I've said to you, looking at the MACDs on the 10946 on the inside, pushing down hard. The fact that we just broke straight through the zero line, this is a really good indication of, and we've got the distance from the zero line. This is really good indication of more strength to the downside, potential strength to the downside. So potentially I'm looking to move to this next high EMA and potentially further. So we'll see. I'm going to pay attention to what's happening on the 10-9-46, putting all the pieces of the puzzle together, helping us build the narrative. I am also paying attention to whether we do retest this area, because we haven't pulled back to confirm that as resistance yet around the 39.01 area. So that would be, you know, that would look like at some point either from here pulling back to 39.01 and then making a move to the downside, or just heading straight down. So these are the areas that I'm paying close attention to, and what the MACDs are doing. Guys, that's it for a Monday morning rundown. I hope this information is helpful for you. If you want to learn more, come and visit us at responsibledaytrading.com. We've got lots of information for you there. We've got a great beginner's guide that you can download for free. And if you want to reach out to us, you can contact us on the web page. We'd be more than happy just to have a chat with you, take a look at your charts, see how you're trading, see if there's anything we can do to help you get on the right track. So guys, have a great day's trading today. Looks like there's going to be lots of opportunities, no news to worry about today, and I will see you on the other side.